Hi everyone, and welcome to this video podcast. Today's conversation is how digital asset markets are evolving, where the real venture opportunity exists, and how Edge Capital approaches investing across both liquid and venture at scale. For those unfamiliar, Edge Capital is a $500 million investment manager focused on sophisticated CeFi and DeFi trading strategies, actively participating in on-chain and centralized markets, providing liquidity and managing risk across cycles. The platform gives us consistent, real-time insight into market structure, token economics, and what actually works in practice and not just on paper. And therefore, Edge Ventures, which we'll be discussing in this conversation, is the venture arm built on top of that foundation. Through this session, Arseny, who heads up the venture strategy, will be looking at areas that we're investing in and what makes Edge Ventures different to traditional venture capital in crypto space. Before we dive in, my name is Boback Khodadoost, Head of Business Development at Edge Capital. And on the call, as I mentioned, Arseny Klekovkin, Managing Partner of Edge Ventures, who leads the venture strategy and investments. Before we dive in, just a very quick disclaimer on this video. This video is for informational purposes only. Please refer to the full disclaimer at the end of the video. So Arseny, I'll hand it over to you. Let's start at the beginning. Give us a quick background on how you found your way into this space.
Thank you, Boback. Couple of words about myself. I started my career in Credit Suisse in investment banking in emerging markets, doing what's now called RWAs in our space. Then I moved on to scaling globally hardware business, and that's where I started doing strategic venture. And in 2018, moved full time to crypto, focusing on fintech projects and financial products built on top of blockchain. And what attracted me in blockchain is seeing it as an underlying layer on which a scalable global business models can be built efficiently. My previous fund, G1 Ventures, returned 2.5x and standing and 4 times TVPI. But what we've built with Edge is a strategic investor for crypto fintech actually needs, covering all capital needs, long-term venture, short-term liquidity provisioning from the DeFi fund, and also helping with tech and growth through our value-add venture partners. The fund is run by myself, Vadim and Mona. Vadim is a founder of Edge Capital with more than 15 years of experience in finance, including IMF, Bank of America, and a large hedge fund. And Mona has more than 10 years as a strategy experience as a strategy consultant and in venture capital in Tecantas, Open Alpha, and Hydra Ventures. She also built startups herself in fintech, edtech, and Web3.
Fantastic. Thanks for the introduction. So let's start with the bigger picture. What is the investment thesis here?
Yeah, so think about it. What happened to traditional finance over the last 40 years? We went from manual trading floors to electronic exchanges, from paper settlement to real-time clearing. And this transformation has created a multi-billion businesses, the exchanges, the clearing houses, and all sort of services around them. And we are at a similar stage of transformation happening on-chain. So stablecoins, tokenized assets, perpetuals, prediction markets, these are all becoming programmable capital markets. And just like in traditional finance, this infrastructure that powers this market will capture enormous value. And the opportunity often is not in the assets itself, it's in what enables those assets to exist and thrive and create value. And there are several layers and aspects to it. What attracted my attention recently, and what I led a panel on at East Denver a couple of days ago, is what is token, how the tokens evolved, what is the framework, and what lies ahead. So a key insight here is that the way we think about utility tokens, which is a commonplace nowadays, and which was created, say, around 5 years ago, with the intention was to avoid regulation. And there were good reasons for it, but as a result, most of these token launches were well designed for speculation and didn't have any much of a connection to real economic value created, cash flows, no ownership claim, no real kind of alignment with value creation. And currently, the pendulum has swung completely to a different extreme. Investors now don't want to look at tokens. They all want equity. But for us as venture investors, what's the important question is what lies ahead. Like where are we going with this? And what I think is that the next wave will be better token instruments with better regulatory alignment and better launch mechanics and better economic substance. We call that on-chain capital formations. Current examples of tokens often referred to as ownership tokens. And essentially, these are the frameworks that encode economic participation, incentive alignment, and governance directly into market structure rather than just some declarations or narrative. And the key here, as pretty much in any venture aspect, is how do you create new value in genuinely kind of novel ways. And here just digitalizing legacy structures, there's like straight tokenization usually inherit legacy constraints and inefficiencies. What we see are the early signs that this could be a huge unlock, and this is something that's really needed because a lot of private equity, venture, and other private capital markets, they do need this new ways of creating liquidity and exits.
Fantastic. And obviously you went over a couple of examples there, but diving specifically, where are you seeing the real opportunity set?
Yes, we focus on financial use cases, and we like it to have like a wide array of potential areas here. So we have the full spectrum from fully validated cases to areas of active experimentation to some like frontier thinking that is more of a kind of research. So let me give an example in each category. The big elephant in the room is stablecoins. They are clearly winning as a next settlement layer of internet, not just as another payment option, the native payment rail for programmable money. That's like the major promise of blockchain that's already being fulfilled. We had over 27 trillion of stablecoin transactions last year. So this is like a big number, and this is rivaling traditional payment networks. This area is fully validating and have a healthy natural growth. So for us, we would look here for the projects with unfair distribution advantages in order to rival the incumbents and well-capitalized competitors. But the real world application surface here is wider than anything else in crypto. What we like and what stands out are the cross-border payment cases in emerging markets, where there is a lot of natural demand, where there is a lot of inefficiencies that are being solved, and situations where traditional finance struggles to service. And the important question is, and the important elements are the natural demand, regulatory alignment, and the challenge is always: is this a problem that startup will solve, or the existing institutions and incumbents can build it easily in-house and just kind of roll it out there, because the tech is often becoming a commodity nowadays. The second example I would give is what we call, as an example, as an active area of experimentation, are the internet capital markets or on-chain capital formation. So here the approach is different. Here we're not talking so much about the assets, but we're talking about the market structure itself. So we see an unbundling of traditional capital markets, so picking up different elements that can be automated and can be kind of made more efficient on chain, and then they're rebundling over blockchains and on the internet, creating even more value in this process. Where we want to invest here is on-chain capital market infrastructure that will kind of enable and make it happen. Novel token frameworks and services, not just tokenized assets like treasuries themselves, but sustainable services and distribution at scale. That's what matters. Technology already works, and the question is how well it can integrate with existing systems on the one hand, and at the same time, how much value it can create. What can it add to the process in a natural kind of complementary way. I'll give a couple of examples. MetaDAO has gained thought leadership in this area last year. Its launch framework enables liquidity at inception. enforces performance-based founder unlocks and uses feudarchy mechanisms to better align governance. Feudarchy, essentially, it's an economic concept developed about 20 years ago and that found its application in crypto, where a small prediction market will allow to make a better decision than just kind of dispersed voting among random token holders. And what they've done also well, MetaDAO, is they backed this all up with a solid Cayman SBC, well documenting all the rights and guardrails for token holders. Another example is Street Up. They've taken a different approach. They help projects to have a compliant traditional equity structure while carving out some portion for launching a token. And having a lot of sophisticated guardrails to protect interests of both capital structures and create alignment among them, allowing to launch, for example, loyalty rewards and other varied use cases. The last example I'll give is prediction markets, and they actually fit all of the above categories. They evolved from novelty betting platforms into accepted and already well-regulated financial primitives. And what's interesting about that is that, what a lot of people oversee, that they embed leverage structurally through probability rather than borrowed capital. So think about it. Buying a 5% probability gives you 20x if it hits, but your risk is always capped at your stake. So no margin calls, no liquidity engines, no funding raise. So this simplicity allows a lot more creativity and lowers the barriers for participation. And for us, the venture opportunity here lies not so much in opening new markets, but what can be built on top of it. So information here becomes tradable. So trading platform, media, sports, that these all can converge, and some new unconventional use cases built on top of it. And that's what we're looking for.
Brilliant. Thanks so much for the insights. So from your perspective, what makes Edge different from other crypto VCs?
Yeah, happy to talk about it all day long, but essentially, and shortly, we are backed by successful high impact operators. This is not marketing, this is our DNA. This is how we think about ourselves as a strategic partner, both for our portfolio and our LP. And we just happen to monetize this value that we're creating through the value growth of the portfolio, which is again aligns everyone's interests. And we have three major impact areas which are led by each of the partners. So Edge Capital, a leading DeFi fund deployed into hundreds of protocols over 5 years, excellent track record, one of the largest liquidity providers on a lot of well-known protocols such as Eigenlayer, Kelp, Etherfi, and others, navigated all sort of security incidents. And that kind of operational excellence translates directly into how we evaluate projects and how we help our portfolio succeed. Second, Allnodes, it's one of the largest validators, about 3 billion stake, very technical. They run and design their own hardware, became the fastest validator on Solana, very frugal and helpful projects with on the technical side and rolling out the network. And the last but not least is WTG. They've advised hundreds of projects, helping founders succeed and move to the next stage of development through biz dev support, fundraising, and solving all sort of one-off challenges that founders can do themselves. And all of this combined is highly appreciated and valued by the founders. So they know this is like the safety network and support they would definitely need. And we consistently secured allocation and closed rounds and in oversubscribed rounds, and usually at the preferred terms, because founders do want to see us on their cap table.
Brilliant, thank you. And from an LP's perspective, how is it different?
Yeah, and this is where it gets interesting, because we apply the same logic for our investors. First of all, for all LPs, we create capital efficiency, unlike any other fund. So usually venture funds take money from investors through capital calls, and LPs don't know exactly the timing and the amount that will be called. So this creates necessity to have idle capital sitting on both sides, and essentially capital inefficiency. So we solve this, we turn the situation around. So we make 100% capital call upfront, and the money go into the Edge Capital DeFi fund, which we use as a treasury solution, and without charging any extra fees. So essentially the DeFi fund works for free for the venture fund, and the LP money are constantly working, and on a monthly basis we draw only what's needed for the next month. So there are two engines of returns working simultaneously, and which achieves like superior results as a result. And for LPs with strategic interest in blockchain, be it L1 foundations or businesses that want to integrate crypto, stablecoin payment rails, our full-blown strategic partner offerings kick in. Access to frontier projects and tech that is currently kind of best available in the market, launch or use of market neutral strategies that DeFi fund knows well how to do, or rolling out tech or some kind of integration initiatives. We've had great feedback from LPs on this.
Fantastic. Thank you for the insight, Arseny. So wrapping up, final question, what is the vision and what kind of projects do you think will be winners?
Yeah, we think a lot about that, and obviously the market has matured. The way I see it, it has gone through three waves of development. Before 2020, it was the time of visionaries, and the market was believing and willing to bet on those visionaries. Then for the next 4 years, the question came, okay, can it be executed? Can it work? And the tech came to the forefront and often became overvalued. And now we transition to the third stage, where all of it works together. Now the question, okay, is how do we create value that is tangible and that happens like today or tomorrow, not in 5 years. And as a result, efficiency is what is the name of the game. So how can you make it work? Where can you find those areas areas and products and transaction situations which can be optimized? And oftentimes distribution, not technology, is a core bottleneck. Where we focus is invest in what we call challengers. Essentially, this is a project that don't compete, they redefine markets. And the key element here is that their capacity to replace the current setup, status quo, with some new scalable alternatives. And we look for seasoned operators building on the edge of blockchain utility with clear validation, well-designed paths to making money, oftentimes some of community ownership and adoption. Timing here matters. We're now at a challenging period where a lot of investors and projects are actively pivoting as old ways and investment approaches don't work anymore. But the projects that survive and build now, they're the real ones. They're the future winners. We position ourselves to capture this infrastructure layer of what finance would look like in 5 to 10 years. Programmable, global, 24/7 accessible. Vibes, not the hype. And I guess what I would finish with is what excites me most is that we finally at the point where you don't have to convince people that crypto adds tremendous value in finance. And is critical to stay competitive. Stablecoin and prediction market volumes numbers speak for themselves. So the question now is who captures this value, and we are on the lookout for these teams.
Brilliant. Arseny, thank you very much for your valuable insights. Everyone, thanks for tuning in, and we look forward to seeing you all again very soon.
Thank you.